Hi, this is Chris with Invest LYH, and today I'm going to go through a property with 3 different scenarios. So let me go ahead and share my screen here. Give me just a moment. All right. So today we're going to look at 700 Polk Street here in Lynchburg, Virginia. And we're going to look at it with 3 different scenarios. Now, the reason why I'm saying 3 different scenarios is because I see that this property is priced with a $30K price cut on 5.4. You can see that. Hold on. You can see that right above the highlighted part here of the address. Price cut 30K. So what we're going to do is we're going to take a look at it with the price point of 130. And I actually took the, and I'm going to look at it at the price point of 130, 120, and 110. And we're just going to take a look at all of these price points and see how our cash on cash return is reflected. So let's take a quick look here. We know that the price is 130, so the down payment 20% for the 130 is going to be $26,000. Right, so that's our down. And this steps down to 24,000. And then 22,000. And I'm going to write at 120K, at 110K. So this 26,000 is for the 130K. So now let's take a look at the rents. I pulled up a picture here of the average rents from 700 Polk Street. And you know I always use the median. So let's go ahead and just zoom in on that real quick. It's the 1173. So just a little bit under $1,200 is what we're going to get in our rents. So now let's go ahead and create our equation. We got all of the price, all the points that we're going to need. So let's take a look at what we're going to net cash on cash in terms of this property here. I'm just going to slide this over a little bit, and I'm just going to make it a little bit bigger so we can have some room here. So right off the bat, we know that we're going to have 1173 as our income. Then we're going to look at our expenses. We're going to have 741 for our mortgage. We're going to have 117 for our property management. And we're going to have 58.5 for our vacancy and 58.5 for our repairs. So these numbers are going to equal 975. So now we just need to take this and subtract that from it. So 1173, minus 975, and what we come up with for our monthly cash flow is 198 monthly cash flow. Our annual cash flow is going to be this times 12, so it's going to be 2376. That's our annual cash flow. So now we knew earlier what our total coming out, or our total down payment is, sorry. So let's put that in the denominator. So it's going to be 26,000. And I cannot write today, guys, sorry. 26,000. And what our cash on cash return buying this property at $130,000 is going to be 9.14%. That's pretty good. That's a pretty good cash on cash return. But now, like I said earlier, right, and you guys see that I got the 741 right here. The mortgage comes right from here, 741. So now if we were able to drop the price and offer, let's say 120, what would happen to our cash on cash return? The cash on cash return would increase, but what would it increase by? So let's take this mortgage amount, the 684 for the 120 offer, and let's do the formula again. We'll do this one over here. All right, so what we're going to do is we're still going to be renting it out for $11.73. Our mortgage now is going to be $684. We still have the $117 in property management. We still have the 58.5 and the 58.5 for vacancy and repair costs. These totals are going to be $918. So you can see that our costs each month have actually decreased. And when we subtract the 918 from the 1173, what we get is $255 in monthly cash flows. Now, from that, if we multiply that out, we're going to get $3,060 in annual cash flows. That looks like a 6, so let me just redraw the 0. Now we can see here that our down payment is going to be $2,400. So if we were to divide the annual cash flows by the $2,400, which is the amount of money that we would put into the property, our cash on cash return for this property is going to be 12.75%. That is an extremely good cash on cash return for the city of Lynchburg. Now, you can see it down here on the little lower left here. What if we were able to offer and it was accepted for 110? They're dropping the price. Let's see if we can get it for 110, right? So let's take the 627 amount for the mortgage here, the 117, the 58.5 and the 58.5 for our vacancy and repair costs. Now our costs have gone down to $861 for total monthly costs. And you recall our mortgage is still at our income is still at 1173. So we take the 861, subtract it from the 1173, and what do we get? We get $312 or $312 in monthly cash flow. Multiply that times 12, and our annual cash flow is now $37.44 in annual cash flow. You can see here, just put that in the denominator, the 22,000 that you're putting down on the house. And what we can do with that is we see that our cash on cash return at 110K is 17.02%. If I could get a deal for 17% cash on cash return, I would buy that every day. Luckily for you guys, Lynchburg is not my market. My market is in Florida, and I do invest in Texas. But like I said, I sharpen my skills here so that I can deploy them somewhere else. That being said, this is a property that I would call up a property manager about and say, hey, can you give me the real rents for Polk, for 700 Polk Street in Lynchburg, Virginia? Because I'm seeing that they're 1173, which I would round that up 1175. Can I get 1175 for that price? And if you can, and you can get it at 110, that would be a great offer. That would be a great deal. So I hope that this helps you. You guys, I see that some people are starting to watch the videos. So go ahead and let me know what you guys think about the videos. Leave a comment if you can. Cash on cash, I think that it's the great equalizer because it allows you to be able to take apples, oranges, and watermelons and compare them all as apples, right? That's what we talk about in economics a lot of times is, can we compare apples to apples as opposed to apples and oranges? And that's what I think the cash on cash return does, because you can use this formula for commercial properties. You can use it for residential properties. You can use it for fourplexes. You can use it for single family houses. So I hope this video helps you guys. It's a little long, but I did go through 3 scenarios. But if you guys have any questions, let me know and let me do a property for you. Send me in a property and then I will take a look at it and I'll evaluate it. Thanks so much and have a great day.